Yeah, it's proper, right? And we're live now, so that's how simple that is. Um, so guys, just catching up a little bit. I'm in Bangkok right now. I was on a panel at Money 2020, which was really interesting. I could like recommend everyone to go to like non-crypto yet sort of like fintech related conferences. It's really interesting to see like a different side of the market, and especially very interesting to see like um how much it is converging already, like way more than I thought. Like all these like payment providers, they're just like using crypto rails and
Yeah,
blockchain rails and
exactly,
stable
exactly.
coins.
I felt this when I visited actually a fintech summit in Kenya in early 2023, I think. And basically, you come to a fintech summit, you wouldn't expect crypto in there, like per se, but everyone is saying, well, actually, in emerging markets and in Africa, basically all of the fintech uses crypto on
Right.
the back end because, like, it's cheap, it's efficient, etc., etc., etc. And it was a bit of a surprise to me. So thinking, well, like it's actually vice versa. So you would expect that it's kind of happening the other way around sometimes, maybe. Like crypto trying to be present in the fintech side of things, but actually it's much more adopted than we might expect, which is pretty cool, I'd say. Like the good highlight of how tech helps the real adoption and use cases.
That's great. Yeah, we'll be releasing a pod soon discussing some of that kind of stuff, like in Africa specifically. Yeah, the role of stablecoins in like cross-border remittances. Yeah, definitely useful in the EMs in those emerging markets.
And that's actually how it should happen, I think. So the users don't have to think what kind of chain they're using, what kind of dollar they're using, or kind of stablecoin. They have the chain abstraction, they have the stablecoin abstraction, they have a lot of abstraction there, but they have the usable interface and the nice UX, which fintechs usually have. And they just solve the problems. And it's great to see this stuff happening.
Yeah, I
But I
mean,
wonder,
a lot of the
yeah,
EMs have like they actually have better payment systems than like the US. But
that's for
like,
sure.
yeah, like their
That's for
currency
sure.
sometimes just sucks. But they have like India has UPI, obviously China has Alipay, WeChat, and yeah, Southeast Asia they all have like their own things. Um,
Well, I'm a huge fan of, Russian fintech, I'd say. Well, coming from Russia, I'd say it's just head and shoulders above everything I've ever seen in basically in other banking and in different countries. Like even talking about like the regular banks, the service is just top notch in general. And like Revolut again, like basically these are people also coming from some of these roots of the, I'd call it like Russian fintech school, maybe, though maybe I'm wrong here, but it's a good highlight of how sometimes in emerging markets, it's like, it's like with televisions in Africa. They didn't have the black and white TVs. They came straight, or like this LRTs, like
yeah,
I forget how it's called.
they
It came directly
leapfrogged.
to LEDs and
Yeah,
plasmas
mobile
because
phones too. Yeah, like skip right past
same,
computers, went right to phones. No
same. It's,
Xbox. Yeah, exactly.
yeah, exactly. And same with the financial system, right? Like you just skip the stuff which didn't exist at all, and then you just jump into the new generation where it's done differently. You don't have to write checks and wait a month for them to clear or something like this. So, pretty
Wasn't
interesting
it
case.
Kenya? Kenya had a whole mobile credit system, right? Which was a huge, yeah, they had a huge payment system. I remember a story years ago where it was a footballer or someone who he won like a player of the year award and the club paid him in mobile phone credit. They didn't even pay him in the local shitcoin. They paid
Yeah,
him in credit.
that's their money basically, and they use these M-Pesa credits, and it's basically and they have phones which are super cool. So they have phones which don't have internet because internet is pretty well. It's not cheap. The traffic is not cheap, but you are able to make transactions through M-Pesa for the cellular phone. So you just have this kind of 10 buttons phone without any kind of internet or anything, but you can just over the cellular network, you can make payments. You have to put the wallet number by hands. Imagine this, like putting
Oh
how
shit!
many characters with these 10 buttons,
Do
but
they
you can do
memorize
it.
those?
You can do it. You can do it basically, which is insane, but which is pretty cool.
I think we're already living in the future, but for now, going back to the present, I'll do like a really quick introduction of the show for the people who have joined us by now. So yeah, market cap episode 7, I think. I'm starting to lose count. Yeah, what we
Lucky
do,
one.
people should what was that?
Lucky one, the 7th, right?
Mm-hmm.
Good
Oh,
number to
great.
have.
Hey,
Yeah.
that's true. That's
should
true.
Yeah,
celebrate.
you're lucky.
Okay, that's
you are
yeah.
lucky.
Although I will say we had a guest on in the RWA space, and then shortly after the mantra OM token
Ooh.
collapse. I think that was episode 5. So,
Yes.
but yeah, number 7. So things should be looking up.
No correlation at all.
Don't jinx it, bro. Don't jinx it, bro. You know, in some cultures, they rub like a bald guy's head for good luck, and we got 2 here. So I think we're pretty. We'll do good. We'll do good.
That's for sure. I was also born on Monday, which is like, yeah, in Russia, it's called like when you're born on Monday, they say that you're unlucky, but sometimes the other way around. It's like number 13th in some cultures, where it's lucky or not lucky, basically.
You can
15,
flip it.
Okay.
You can flip it. All right. Guys, we're going to talk about the markets again. What's the market doing? Recent events, news, the trending narratives. As most of you know by now, we do this every week with guests from our network, people that we're interested in talking with, who we might gain some insights from, and then with team members from our layer research team, right? We do it here live on X. We're also live on YouTube if you want to check it there, and we'll post a full episode on YouTube later this weekend as well. So for the short introduction, I'm Stefano. I'm Director Institutional Services at Alea, and I'm your host and moderator. Then we got Daniel, our research lead, focused on newsletters and token theses particularly. And we got Dee, our analyst and panel contributor. And for our guest, we got Ivan, co-founder and CEO at Resolv. I had to say it. Let's call a spade a spade.
Yeah. Okay. I have this
Mr.
title on my
CEO.
LinkedIn at least, so, well, okay.
Exactly.
Nothing to
Ivan,
shame.
tell us like real quick a little bit about A, yourself, and B, about Resolv and what you guys are doing.
Yeah, sure, gladly. Well, starting with myself, I actually, like, my background was in applied physics, and I should have worked with nuclear reactors and stuff. But instead of that, I went into finance and worked with other weapons of mass destruction, as I believe Warren Buffett called them, the derivatives, right? But I was on the kind of safe side of things. Like with nuclear reactors, opposed to like nuclear weapons, you can have like the weapons of mass destruction, you can have the hedging instruments. So I hedged large corporates on FX rates, credit, and other types of underlyings. And later I was responsible for setting up, from a structuring standpoint, the desk for structured investment products because of the change of the regulation locally in Russia. And so basically it was like a startup within one of the largest banks, basically from scratch, which was pretty cool. And yeah, so my background is basically derivatives, investment products, structured solutions, and all this. And our team at Resolv is TradFi fintech people with relevant experience. And basically, we've been looking into how we can enable crypto native yields and how we can make the best infrastructure for these yields, aggregation, creation, curation, and distribution. Because, like, in short, what's cool about stables, and I'm getting to stablecoin topic here a bit, is that they are great rails for yield distribution. So they're capital efficient. You can use them as a collateral. You can build up leveraged positions. They're easily transferable. They're liquid. They can be transparent if you build them in the right way. They are self-custodied again, if this is built in a better way. So it's just better from every regard from traditional instruments, which are there, like structured products, EMTNs, bonds with structured payoffs, etc. And this is going to be huge. We are seeing currently a lot of transactional things happening, and I believe some of the topics that we will be discussing today are about transactional use cases and how, like, the transactional business is growing, which is huge. But if you look at it in the global market, bonds are a bit bigger than transfers in general. Well, yield generation on assets is a bit bigger than transactions. Of course, again, like, you can't compare them directly. So this is a huge narrative. And what we build at Resolv, we basically want to enable the best opportunity for the users to stay safe in an environment where the yields are being generated by crypto native means. That's it in short.
That makes a lot of sense. And you're absolutely right. We're going to delve into these topics more deeply on this show. Uh, when you were making your introduction, I didn't want to cut you off right at the beginning, but you reminded me of that scene in Margin Call. If I think a lot of people have seen that movie, right? Where he's like, "Oh, so you're a rocket scientist. What are you doing at a bank?" And he's like, "Well, frankly, it's all just adding up numbers, and the pay is significantly more attractive here."
I like another actually another analogy. This is less popular, I think, but there's such a series as Futurama by the creators of Simpsons, and there was an episode when the scientists created a smart hat, which just a monkey could put it on him and became the genius, like the genius of the geniuses. But then at some point in time, the hat got damaged, and so he became kind of a bit of an average person, like a typical regular IQ. And then states that this monkey then went on to become a president of Fox. And a monkey just says, well, I don't want to be genius. I don't want to be like everything like this. I just want to be an average person, wear a nice suit, and have a decent salary. And then this level of brain activity is just enough to get just that.
It's a very unique analogy. I've never, like, you'll never hear another guest give that analogy for sure.
I mean, I was just saying that I was not too smart to run the physics, but maybe okay for the finance. Finance is not rocket science.
No, I've heard that pipeline. Yeah, like the physics to finance, or even like physics to like e-commerce pipeline. Like, yeah, I don't know.
Again, basically, if you think of it, so Michael Yegorov, the founder of Curve, we basically started at the same university. The same university is Nick Staronsky, who is the founder of Revolut. It's actually kind of, there is a bit of a track record of people going and trying to build stuff after they've just dived deeper into some abstract concepts.
Interesting. So it really is just all adding up numbers or subtracting them. Talking about numbers, this is what the market has been doing. Performance week on the week, it's looking pretty great. What do you guys think?
Looking good. Yeah, Solana up, looking nice. Do I see hype on here?
Okay. And why is BNB a bit of a different color here, I wonder?
Yes, or it's just like a weird shade of green. I don't know. I actually have no idea. Yeah, it's not up a whole lot, but it's like a brighter shade of green. They should. So if someone at TradingView is watching this, like, you should probably.
Also, Tron, I think, falls a bit off from this perfect picture. Being honest, personally, I don't look a lot into different alts. So, like, I'm a simple man. I look at BTC, I look at Ether, I look at Solana. But I was a bit surprised to see when basically BTC and Ether went up, how a lot of the alts, which many have forgotten, I'm not going to name the names here, but you can imagine some of the like super old chains, which I believe had no traction or anything, went up like 20-30%. Why does this happen? Who are the people who just try to run and participate in this stuff? Maybe you have some explanation, because for me it's hard to understand the behavior when like basically the core assets rally, and then you have a multiplied effect for alts, which basically have no fresh or updated narrative. How does that actually go?
Yeah, I mean, there's still like, the boomer coins, you have a lot of those. Like, they are still listed on these exchanges, and they do still get a lot of like trading volumes and stuff. So, but I mean, their relative rankings move down over time. So yeah, now you have things like Hype, or even like, I guess the Trump coin is not a good example, but you have like more crypto native things that are taking, rising up right into those like top 25 spots and replacing these like boomer coins. But yeah, I guess it just takes years. I mean, it's already been years for some of these coins, right?
It's just overflow of liquidity, but I don't know how it happens in practice. Like, just person like going, oh, nice, BTC is up, let me go buy some XYZ.
I think XRP could be the sustainable, like the boomer coin that's actually sustainable. Like, are making some big, I think the largest crypto acquisition, right? It's like 1.5 B. So, but the others, I think, if XRP, I could maybe see actually like not just declining and actually staying somewhat relevant. But the others, somebody, we don't need to go into names actually. But
it's funny. Just today, I talked with some team members from Ripple, at the conference, and he asked me straight up, so like, what do you know about us? Like, what do you think about us? And I said, well, to be perfectly honest, like, I know like you're like top 5, maybe sometimes even top 3 coin by market cap, but to be honest, I don't really know anything about you other than that fact. And then he actually told me a little bit about what they do. They do a lot of stuff: custody, OTC, market making, payments. They do a lot of stuff. They're just like not really like crypto native and like not really on Twitter, and therefore crypto Twitter kind of fades it. But they're doing actual shit,
But that's for sure. I mean, and we'll see more of this. So you can recall this Stripe, I believe, acquisition, right, for 1.1 billion at some point in time, when everyone was like, "Whoa, who are these guys?" This person has like 3K followers on Twitter, or maybe 900, I forget, and they have this was 1.1 billion, and they never yapped.
Bridge.
They never, Bridge, exactly, Bridge Network. They never yapped. They never kind of been public. They just did shit. Like
we actually did cover them. So I'm gonna claim clout on that. We did cover them Bridge very briefly before, but yeah, it was not something that was what, like, if you were not into like payments and remittances for stablecoins, like, you would not have known about them at all.
That's a great highlight on how sometimes the aberrations are there, right? So if you're not hyped on Twitter, it's like you're not existent, or you're not there, or you're not building, or you're not doing stuff, but actually like deliver the product. That's what Bridge did, right? And then just deliver, and it works, and it has use cases, and it doesn't matter too much if you are in the top yappers or not. It's just that we're used to a little bit of a different kind of approach, narrative to marketing and everything else. But I think we'll see more of this, especially in a kind of increasing competition market, right? In general.
No, but I agree with what he's saying.
Projects flying
I think Tron could also be in that
if I may
category.
throw in a bit here with regards to, say, BTC performance, like I've seen some good articles on how we are seeing the decoupling from the stock market in general in terms of correlation of BTC, it being aligned more with gold. And just like the basic idea that, okay, now as US equities may become potentially less hot in terms of liquidity, attention, and everything else, and the capital flows go out of the US and get back to the countries due to the new tariff policy, basically these stop to become like the prime assets in general. But there is a flight to the prime assets or quality assets, which is first of all gold, obviously, and that's how we've seen it rallying. But then the BTC is kind of the next in the line, because it's kind of similar in the approach. Again, like I won't name the typical the typical phrase of BTC being digital gold, but still the perception is there. And so how we can see that currently we may be actually seeing, due to this change in narrative, on how BTC decouples and the correlation becomes much less pronounced with the general market, which is a pretty cool thing, because that would mean that a lot of funds and asset allocators would go to this asset to diversify their portfolios, which are sitting in the directional setup with the US equities, basically. So for me, it's a bit of a bullish signal, but wondering what's your take on this?
I think it's a very reflexive feedback, right? Like what you said with, some of these crazy alts, they're up 20%, just from BTC and ETH moving. I think a lot of it comes back to, when times get tough and the prices move in awful directions down, you see a lot of, people opening hedges. People, it's so easy for these big market makers, big institutional traders to open short positions in a lot of these illiquid shitcoins, right? And as soon as you see these large moves in the majors, I think the preemptive thing is to close out a lot of these shorts. And I think you see that in a lot of these illiquid coins, that maybe a lot of these big price movements you see is simply hedges being unwound, similar like you might see in the traditional markets, where you see these huge spikes in the VIX index, there's a big skew in the put-call ratio. But then often after that, what you see in these rallies often is simply options dealers closing out their hedges. And so, I think when you look into account of the decoupling narrative, there are certain points to suggest that the decoupling is happening. There's one camp of people who think that as soon as we start talking about the decoupling, we're just, we're the bad news is waiting ahead of us. And now everyone's jumping on the decoupling narrative. Actually, we're going to taste some pain in the next few weeks.
But then the market basically kind of.
Exactly. Yeah. But then at the same time, I had this conversation with someone recently, and you look at the core principles behind why a lot of people bought or owned Bitcoin in the first place, right? Is, you wanted an asset that was relatively free from, government decisions, corrupt central bankers, the libertarian bros out there. And so in reality, these are kind of the moments where you would argue it's kind of do or die, really. Do these big global trade shocks and whipsaw price actions from the orange man in America, why should they have impact on an asset which was founded by the cyberpunks and the libertarian people who were so against overprinting of money by central banks?
And they're going to tax you on that one anyway.
Well, exactly. And you see with the flows from the ETFs recently, we've had back-to-back days of, I think, 900 billion in flows. So not 900 billion, sorry, 900 million in flows. Yeah. 900 billion. Jesus,
I wish it was like a billion.
Yeah, a red panty night if that was the case. But, it's an interesting concept to be discussing now. And I remember a long time ago, there was always this case that Bitcoin simply lags gold. If you really jump into the analysis of it, in some cases, some people would argue it doesn't really follow gold at all. And actually, there's a lot of price action which is unexplained. It's not always NASDAQ up, S&P up, Bitcoin up, like we saw in the period before the Trump election, right? The indices were completely ripping and we were lagging for months and months and months and months. So it's a tough one to really put your finger on. But I think the core principles of why people bought Bitcoin and owned Bitcoin are the simplest answers sometimes as to the great decoupling narrative.
Right. Yes, Stefano, if you want to pull up today's newsletter, there's actually a chart right at the top of, just a quick chart of that decoupling. It's just for the past couple of weeks. That's perfect. It's definitely you can see it, on the chart. There's not that many times.
Love it.
At least in the past several years.
One.
Yeah, 21 Capital. Yep, that one.
There we go.
But Bitcoin's not a multi-trillion asset right now, right? It's like 1.8 trillion or something like that. But it's getting up there. So even if it's just one day or a week's price action, that's actually pretty meaningful for, an asset that big, right? Maybe 5 years ago, it's a different story, right? It's much smaller. Even more volatile, and those things mean less. But right now, I think the decoupling narrative definitely has more legs. Unprecedented, once in a generation type, geopolitics / macro stuff, right? Coming from the White House. Plus, gold, obviously, just ripping, right? Completely outperforming everything. So I think we can see how long this it remains more correlated with gold. I mean, right now, the past couple of days, gold's not actually doing as good. So we'll see, right? When Trump starts backing down on the tariffs, and okay, maybe we don't need gold we don't need gold as much as we thought. All right, we can chill out a little bit. Keep some of the stocks not going to zero yet.
And actually on that part, I was a bit surprised when I've been talking to a large, well-known crypto fund, basically a liquid fund, when they're saying that we raise funds by basically explaining to the clients or to liquidity providers, LPs, that, hey, okay, so that there may be risks, the geopolitical ones, right? And if in, say, 19th century or in the beginning of 20th, people were just kind of showing gold nuggets or bars somewhere and running across the border trying to sell that stuff. Currently they're saying, okay, but have something a little bit more convenient for that. Well, not just kind of running across the border, obviously, but just for the fact that it is less controlled. It is less susceptible to the geopolitical stuff. It is potentially decorrelated to some of this. Again, that's one of the arguments of the decoupling, right? That is kind of the US focus, which may be fading a little bit with the tariffs, like affects BTC less than say US stock market.
Right. Yeah.
And that's why
Bitcoin's not from a country, right? It's not like there's US tech stocks. Like Bitcoin's not from a country. I mean, the hash power is now like the US is, the big player in hash power. But China still has a lot of mining
also
activity still in China
because of the ETFs. But
right. Yeah, exactly. So it can be incredibly globally neutral. You don't have to like pick a side or whatever. Ethereum could maybe be similar, but it doesn't. It doesn't show up in the price.
Everybody's laughing when someone mentions Ethereum now, which is sad because I myself is an Ethereum maxi.
Yeah,
so seeing
in theory, like in theory, you say Ethereum is like similar, right? Like globally neutral, like it doesn't belong to any country. But I guess people just they want to stick to Bitcoin. So it's like, okay. I understand
it's also BTC is also much easier to understand. So I had say a lecture to high net worths, like in some fancy club, not club like a dance club, but a club where people like smoke pipes and cigars. But so I've been like explaining a bit on cryptocurrencies, and it like for you to understand like the level of discussion was like real estate versus gold versus Bitcoin, stuff like this. And then when I said, okay, there is Bitcoin, well, you know a bit about it, I know a bit about it, that's what I know, but there are actually other stuff. And they're not like all meme coins or like random bad things or anything. They can be meaningful. And I just told a little bit about Ethereum, about EVM, about smart contracts. And they like many of them like,
just tune out. Right.
What the hell is going on here? Like, what are you saying? Like there can be a new financial infrastructure fueled by this crypto, which many perceive still as like just some random volatile stuff, which is backed by nothing, like by hot air. And they're like, whoa, maybe we should take a look into this. So yeah, I believe, with Ether, it's funny. Like I'm a huge believer in Ether and EVM as an infrastructure. And I believe it will be fueling and powering the financial infra, and maybe not like on the base level, but maybe like on L2s, et cetera. But it doesn't relate to the token itself and to the token price. So Ethereum can be great again, or like once in a while, but that doesn't mean that Ether as an asset will have a high price, which is not great.
Is great. As a protocol, it is great. Like right now, it is great, right? You have like 60 billion plus in TVL, so it is great. But the token price is not great. So yeah, definitely two things can be true.
What about the change from proof of work to proof of stake? It was a huge thing the network underwent. I don't know, was it 2 years ago, 3 years ago now? And we said this before. And almost in a sense, could you almost argue that the inefficiencies of POW almost helped the price action move so high when combined with the NFT mania, right? So many people pumping up gas fees to mint these NFTs. You had gas wars. People complained so much about how high gas fees were. But after, was it one of the EIP updates in which a portion of the gas fees were burned that were sent to miners? Could you argue almost that helped in the nature for ETH going up so high in the previous market cycle? Now, whereas with proof of stake, you can say, yep, sure, transaction fees are lower. The network, it doesn't have the issues with mining, electricity cost. But were the inefficiencies of proof of work almost a driver for how high that the price did go in the 2021 cycle?
I don't think so, personally. But I just think it's like it's been a few years, right? So if you want to get exposure to we discussed this before, right? I mentioned if you want exposure to like the world computer narrative, like there's other things as well now, right? In 2020 and 2021, like the other things were just not like a lot of sucked in 2021, right? Like there's nothing there. It was like some fake protocols made by the FTX team, but now there's actually like some stuff on Solana, right? So if you're looking to allocate, there's just like a lot of other things. Maybe people see Solana and like, oh, like they're moving a little faster. Maybe I'll allocate there. So I think that's responsible for more of it, to be honest, as opposed to like the natural mechanics.
Let me tell you a funny story instead of deep thoughts here. So I just had a chat with a guy who was running a massive Ethereum nodes and just mining Ether back in the days of proof of work. And he was massive. I mean, he's like, I don't know, like few percent of of basic mining power, something like this. Just a dude from Siberia, Russia, something like this. And so he was like, okay, cool. But like there is a conference, and I can't recall the year, but I believe it was maybe like 2018, 2019, something like this. Again, I forgot the specific dates. But he came to the conference and met Vitalik to ask like, hey, dude, like I've mined quite a bunch of Ether. Do you think that like $20 is a good price? Basically, should I fix the gains? Like, just what's your perception on the price dynamics of Ether? And again, I don't know if this story is true. So if Vitalik is watching this, maybe he can comment. And so what he said is that $20 is a lot, man. Like devs are not happy. The fees are high. It's hard to build on Ethereum. So actually it's pretty high. So sell at this price because I believe it should go lower. Maybe like $3-5 would be good. And so the guy sold like material part of his holdings of Ether at $20 per unit back in the day.
That sounds like something Vitalik would say. To be honest, like
yeah, exactly.
Yes,
That's first, brand, right? So. Like cheap deployment, low gas fees. But that's funny. I mean, like it's funny how things can be a little bit taken from different perspectives on this.
Ethereum. Going back to BTC a little bit, there was some very interesting news coming out from a new fund called 21. Let me pull it up. This announcement wraps it up pretty good. But yeah, some major players, including SoftBank and Tether, are basically copying MicroStrategy. So yeah, partnering SoftBank, Tether, Bitfinex, multi-billion-dollar Bitcoin acquisition vehicle, right? Yeah, what do you guys think?
Maybe I don't know something, but why is it compared to MicroStrategy? I mean, like just the fact that both buy BTC. Yeah, so I mean,
yeah,
like,
it's kind of like copying the same concept. Yeah, they're just issuing stock, issuing convertible bonds and then just buying growth. Just buying Bitcoin. And I guess their whole, like, to be honest, like their only edge is just that they're younger, like they're less far out on that
and they also
escalation
don't have other
cycle.
Business attached to it,
exactly.
Right?
Like MicroStrategy has baggage, right? It only just recently hit like broke its all-time high from like over like 25 years ago or something like that. So yeah, this thing is new. I mean, I guess it's actually live right now, and then it's going to have their SPAC merger. But yeah, and then it's going to be.
Oh, love it! I mean, like this looks like a typical startup pitch deck, like competition.
Yeah. I mean, some of these things are kind of like it's
better.
Like purpose built KP. Yeah, I mean, some of this is a lot of fluff. I mean, to be honest, but. Yeah, like there's some room for people that just don't that like the idea of MicroStrategy, but like I think there's room for one or maybe two other groups to maybe get involved.
Apologies if that sounded like a pun. I think it's great stuff to have in general. Again, for me, maybe I don't see a lot of innovation in this in general. Again, maybe I don't know the details. It's like a dedicated capital allocation to a specific asset that we generally love. So what's not to like here? And definitely good thing happening. So great stuff. And for Tether, I believe like it may be a bit surprising that it didn't happen earlier because they have like a massive allocation to BTC. For them, it's just normal and totally fine to run the fund, which is focused on this, which is properly managed, which has a decent wrapper, which kind of can have some external economies and revenue generation, flywheels, etc. So yeah, like sounds like a no-brainer.
Tether's spending. So they've been spending, right? They have some investments coming out recently, right? They had this. They have Rumble, $700 million investment in Rumble, Plasma chain. So yeah, I know that they have a lot of cash for sure. So
imagine they buy XRP. How about that?
I think the difference is as well with 21 was the big criticism people have with MicroStrategy or strategy now is that you buy one share of strategy, you're not getting that great an exposure in terms of Bitcoin terms. And these guys, I guess, the novel idea they're trying to come out with is that, you're getting more Bitcoin per share that you own. But I mean, they've got the exactly. This is the thing where you could argue, well, why do I need another vehicle to buy when I can buy an ETF or I can buy strategy or I can just download a Coinbase account and Coinbase, Kraken, whoever, and buy some BTC. It's a weird one in a way, but I guess you could also look at it. Is it a way for Bitfinex and Tether to try and kind of legitimize themselves and, put their tentacles within to TradFi and with people not looking at them so much as a big shady dollar wrapper where, for years everyone's preyed on the downfall of Tether. You can read FUD pieces about Tether every week till the cows come home if you want to. But I think ultimately it's just it's like a new flavor where at the minute, I think people are only just wrapping their heads around strategy, ETFs, and with these.
Yeah, that's what we see happening across the board in general. So, and basically that's what we at Resolv do. So we come with TradFi background, right? And we're like, okay, time to bring the great stuff to the people who are basically like, yeah, I'm myself confused. I know maybe 300 people in finance and maybe 5 of them are in crypto or kind of pivoted materially. And the rest, 295, they just kind of, oh, what? It's year 2025. Crypto market cap is 3 trillion. What? Okay, whatever. I'll just go do stuff in a regular way in the brick and mortar business, which surprises me. Yeah, but for these people, when you come to them and they there are still some conversations from, but there are still some conversations that people just kind of know BTC and nothing more. But being honest, over the last couple of years, I've seen how almost everyone in TradFi knows at least something about crypto. 2 years or 3 years ago, it was maybe 10, 20 times less in general. So people talking about crypto yield generation products, new funds and everything just kind of pops up. So pretty cool thing to happen. And that's what crypto people are also trying to build, kind of say, okay, let's try to infiltrate the big banks, the capital allocators, the conservative ones, how we can do this. And it doesn't happen overnight, right? Especially when you've been known to run some stories in media which doesn't look very nice and tick the red flag boxes on any QIB process. So it's not like this.
Yeah, we were talking about that with the whole mantra thing because there was so many TradFi players involved there. And it's so unfortunate that that has to happen. It's just a bad look for us. But putting that aside, I do kind of echo what you're saying. When I go to conferences, I always meet a couple TradFi guys, and I'm kind of like, oh, okay, that's cool. So what's the involvement? What's the link? Yeah, we're running a crypto desk, or oh, I'm just personally interested, and we're just doing a prop fund thing, those type of things, right? So the interest is definitely there, and I do think they're kind of converging. Just I mean, again, today I was at Money 2020, and one of the people I spoke with, actually, we were on a panel, I was moderating it, was the VP of APAC from Circle. So I bring them up because they're sort of how should I say, the counter to Tether. And they came out with some interesting news as well, right? So let me pull up that announcement of theirs. Here we go.
While you do this, I wonder why it's called Money 2020. Was it created 20 years ago and it's token 2049? When the year comes, you just can't rename it and it still becomes kind of obsolete? Or do you know the story behind it? I don't know.
Is it 2020 hindsight or something like that? Yeah, what's it called? Hindsight is 2020, 2020 vision. Yeah, it means perfect vision, right?
Yeah,
okay, got it.
Yeah, because
Nice.
they actually the stylization is with like a slash, so it is money 20/20. So I do
Got
think
it.
it refers to like perfect vision.
Perfect vision. Laser eyes. That's what we should have added to. But yeah, apologies, I interrupted on the CPN, I believe.
No, we need better. We got 2020, we got 2049. Like I think we need some better names, maybe. But so switch it up a little bit.
Maybe they hoped the ETH price would go back to that level or something. I'm not sure.
There are actually quite a good list of funny numbers that anyone can use, like 69, whatever. Like there's a full list of it, whatever.
Blade Runner 2049. What is it? 1984. all these dates, right? they're always weird. Anyway, Circle Payment Network. Yeah, pretty cool shit. They're saying like existing cross-border payments can be slow and expensive, right? That's what I hear a lot. Like, okay, doing payments on crypto rails, on blockchain rails with stables, it's just faster, more efficient, it's cheaper. And that's all what they're saying here, right? It's programmable, it's secure, it's always available, it's 24/7, it doesn't sleep. And they're flexing 20 design partners. Yeah, go ahead.
I mean, like, let's just address the elephant in the room. Well, basically, like, we can talk a lot about crypto, about like the cypherpunks, about anything in this, about the programmable money, but like the real pain in life is just cross-border and the SWIFT, and the timings, and the control over this, and the fees. And it's actually a pain in the ass, like, to be honest. And there is actually a bit of fear sometimes that, okay, guys, and what if Swift just integrates crypto and makes like $0.1 transfers within 1 minute? And then basically, thank you very much for all the stable coins, for all of the cross-border transfers, for everything, etc. And Swift definitely has these programs, and they're basically looking into this. So it's like sometimes it's like this boogeyman of crypto. Like, okay, guys, you're kind of trying to run a fancy stuff here, but if just these guys just stop doing the bad work and just try to put a bit more effort into this and just share a bit of revenues or reduce them, everyone's gonna be out of business like the next day. I'm not convinced about this, though.
I think like it does sound easy when you say it like that, right? It's like, why can't the big incumbent just like, they have all the money, they have all the resources, why can't they just, outcompete? But then they never do, like they never try, or I don't know, too much bureaucracy or whatever it is. And now it's not even talking about stable coins. There's already competitors for Swift rising up, right? Like I think it's over 50%, it's like 54% of China's trade is not even using dollars, right? Is denominated in their own currency. They got Project M Bridge. They have they have a different internationalization thing, the renminbi international payments thing for for cross-border, specifically for cross-border payments. I remember it was around 1 year ago almost. I met a diplomat, I guess you could say, and he said the CBDC thing in Asia is more like, it's not even for people, it's just for businesses. It's just for like cross-border trade, payments between businesses from these different countries. So they don't have to use SWIFT. They don't have to do anything like that. And so I think that's playing out right now. I think stablecoins can be good from the individual side, not businesses, people, right? Like people maids in Hong Kong, sending money to their family in the Philippines, stuff like that, or Singapore. So I think stablecoins can be good.
But fintechs are also solving this, and quite in a nice way, I'd say. Like with much lower fees, with instantaneous redemptions and everything
else. But they can use crypto as well, so they can make some acquisitions. So I think we'll see a mix, a good mix of both, where the lines can blur between crypto and fintech.
I believe the problems which we'll face, we're facing them now. So now they are a little bit less pronounced because there are other problems, which potentially are a little bit bigger, is actually the national currencies and the exchange rates. Because basically, first of all, you don't have other stable coins apart of USDC, apart of USD ones, right? Yeah, that was a misspelling from my side. So they're all linked to USD. There are some Euro-linked ones. Definitely, there are projects in different countries linked to local currencies, but I believe, well, at least when I looked into this in more detail, like about a year and a half ago, there is almost no projects like really driven by the authorities which are on public blockchains. So CBDCs, kind of by design, are usually on kind of private blockchains or some setups where usually it's using like internal infrastructure for obvious reasons. Like it's super scary to just release your own currency into somewhere into the void where some dude like Vitalik or whoever he is and some people run some shady stuff which I can't control, or I can't potentially control the issuance or anything else. It's super scary. It's like a part of the monetary policy. So that's totally understandable. But what could happen is that while we'll be having CBDCs run on private chains, we'll have some kind of an exchange layer, which can be built on Ethereum, for example, or it can be settled for BTC, for example. Because basically, like, if I were, I don't know, any big power player in the world, I'd say, hey, dudes, why do we have to settle in USD? I want to settle in my own currency, or I want to settle in a currency which is not related to a potential geopolitical conflict or opponent or anything. I don't want to support the hegemony of USD. BTC can be this kind of settlement layer, basically. But you need to build the markets which create efficient markets for exchange. Because for now, go try to exchange something outside of G7 currencies, like the most liquid ones, or G20 currencies. You'll get, I believe, 5 or 7% bid offer spreads for this, just
right
because of how liquid they are.
The local currency trading is definitely a problem. Like you've seen, like multiple, like Russia specifically. There's like some headlines like trying to trading in Pakistan,
50
trading
50 countries and 50 currencies, and they are kind of exactly. They can't be used because like they're not global ones.
Yeah, and a lot of them are unstable. So yeah, I think there's definitely for international for local currency trading, it could be interesting. Yeah. It could be one solution, right?
And there are funny cases where some currencies are linked to USD, but are not USD, like AED, the Emirates dirham, for example, which is another interesting highlight of like potentially like this is the peg, but this is not the asset, which is kind of directly linked to control.
It's the OG stablecoin, right? Like Hong Kong, like they're like the OG.
Exactly.
Was it Qatar or Kuwait?
Qatar also has the peg. Yeah.
I remember back in the day there was it Kuwait that had like people were trying to like buy Kuwait. Was it Kuwait dinars on eBay? Because they thought like it's going to get repegged to the dollar. So people were like trying to buy them on eBay. I remember that was a thing.
Yeah. There was a funny movie which was about some kind of monetary reform in Russia in 1930s. Again, I may be missing things here, where basically the paper money was redenominated, I believe, but the coins were not. And the whole movie is about the guys who are just basically riding across the country and trying to get the coins and exchange, because they knew that kind of after the reform they're gonna keep the same value because like of the low denomination, but on a scale that could basically like make you a gazillionaire or whoever using these mechanics.
That's sick. Dudes, let's switch gears a little bit. We've been talking a lot this episode about TradFi, macro, but let's dig in a little bit on crypto. There and specifically in the area of stablecoins, there was some very interesting news coming out from Hyperliquid. So Hyperliquid is introducing Halo, which is developing a stablecoin on Hyperliquid called HUSD. So yeah, pretty big news. I'm specifically very curious about Ivan's thoughts on this.
Yeah, just to give some context, so we've been using, we're big fans of Hyperliquid. We've been integrated with them since October last year. It became the first hybrid setup where we have taxes, where we hedge our operations to back the stablecoin, where we hedge our operations with Hyperliquid. We're on HyperEVM. We've been on HyperEVM pre-deposit vaults, and so on and so forth. And I mean, like, this is just a great product and a great community building stuff. And so this is just logical. And like in general, again, some of the narratives which I've heard from the big fans of HL ecosystem and Hyper EVM is that, okay, so look at Binance. Binance is huge. It's massive. Hyperliquid is creating the potential competitor and a huge and massive revenue generation project, right, in DEX's space. So imagine what would happen if you had all the resources of Binance and put them into actually building an ecosystem. Well, that's happening with BNB, right? But that's a little bit of a different story here. So Hyperliquid can capitalize on the revenues that they're being generating. And what's cool about Hyperliquid is they actually focus on driving the revenues into the ecosystem development. Let's put it this way. Or they share the revenue, basically provide an upside to the holders of the protocol token. So they can capitalize on the massive business that they've built as an industry leaders, and they can expand it. And the Hyper EVM is the reflection of that. And then they can basically try to tap into other segments of the market. And stablecoins, well, again, I'm biased here, but I believe stablecoins is one of the biggest and largest narratives in the space. So for them, it's just obvious to run this and try to build it natively. Natively for obvious reasons. Well, first, you don't want to have exposure to systemic risks of other solutions. We basically also try to minimize the exposure to other stablecoins to not increase the systemic risks. And second, you can have all the incentive mechanics. You can have all the liquidity flywheels. You can have all the benefits from revenue share and everything else contained within the system and share the revenue streams. And that's also one of the ideas of HUSD, as far as I know. Not to just kind of grab that gazillion dollars that they made, like USDT, and then sit in golden chairs and a team of 13 who oversees like 100 plus billion of assets, but just actually pour this into the development of the ecosystem in general, which is cool, right? So for me, it's super logical, but being the person who loves innovation, I'm just a little bit kind of less excited about the fact that it's being backed by the typical RWAs. I mean, again, this is understood. This is needed. This is something which is considered like the true stable coins also by regulators, right? That's something that is needed. And actually, like, if you want to build it on scale from the start, you likely need an RWA-backed stable. You could go to USDC, you could go to USDT, you could go to BlackRock and Biddle or whoever else. But if you can build it yourself, then it's something that you should do. But I believe there's still quite a bit of space, and there are stablecoin projects on Hyper EVM apart from us, like Felix, for example, which is using the CDP model. Yeah. So there is quite a bit of space for this kind of more crypto native backend or kind of the yield focus side of things, where you still are able to provide additional value. But yeah, excited for this happening. I think a great idea, good narratives. Again, for me, it should be like a little bit of a worse news because there is a competition there. Like we also definitely will push for using USR, our stablecoin, as a collateral on Hyperliquid. This kind of makes it a little bit more difficult. But in general, as the development of the ecosystem, I think it's a good thing to have.
No, yeah, it shows you're building in the right direction, right? When you have these competitors rising up. So, I think in episode 5, yeah, we discussed exactly this of how, the profit margins are going to be flowing from the issuers to stuff like this, to actual like apps and developers on the chain. Like when you have Tether raking in like more profit than BlackRock, like it's not normal. So at some point in time, this is going to when you're gonna have some stable coins that come up and say, hey, like we can maybe at first it's like, oh, we'll keep 90% of the yield and we'll give 10% to, I don't know, like developers, users, whatever. And then over time it just becomes, you have more people, more protocols doing that. They have to keep lowering to stay competitive. And then, and then ultimately you have maybe a much smaller profit margin for these issuers, but you have a much more robust ecosystem for developers and those end users. So I think the on-chain landscape is like the place where this might play out first before the centralized exchanges, right? That'll probably be the end goal, to have this kind of stuff like on Binance, right? Instead of USDT or USDC on Binance, you have stuff like this, right? And then maybe some of these you can have some mechanics that return yield to users So token holders.
And I believe that's a good highlight. Again, maybe I'm mistaken here, but as far as I recall, HUSD uses M0, basically, like the infrastructure to enable it. And it's a cool highlight
that's what
of the
M0
idea.
does, right? Yeah.
Yeah, exactly. That's what they do. They kind of say, okay, let's try to basically put the revenue streams into the app layer and try to generate the distribution here and to put it into the right direction. Because again, one of the criticisms of USDC, for example, is what they do with the revenue and how the revenue streams go and how Coinbase is basically getting.
Yeah, it turns out that they give a bunch of it to Coinbase, like maybe too much of it. They have to.
Exactly.
So
exactly. And so it's like, okay, this model is broken. And I believe so, like some of the other issuers, like Agora, for example.
Yes.
One of their ideas is to basically, okay, this is a bit broken. This can be done better. Here we see how this has been happening too. And it's pretty cool. So, I mean, like, I've worked in TradFi, like, overall, like, for more than 12 years. And it's cool. And I haven't seen in these years, like, the innovation, like, actually happening on a yearly basis or almost on a monthly basis. That we've done quite a number of cool new stuff, which haven't been done locally, but mostly it was a kind of a replication or realization and update of an existing mechanics or some kind of idea which some smart French dudes invented back in 2027, for example, in 2007, for example. And here we're sitting basically in 2025, and we're seeing how this stuff changes, how USDC evolves. Like, I believe we'll recall how we are sitting here now today and discuss the CPM, right? When it didn't exist like a month ago. And in 5 or 10 years, when likely it will become massive. We'll be recalling how we've been sitting and discussing when it appeared and when it didn't exist at all. So that's things that actually make me excited about how the development happens and how a lot of number of new things are just happening as we're sitting and talking right now.
Right. Yeah. Things move fast. I'll give an interesting example that I just saw. Because I saw that it was like, I think last week, it was like the anniversary of the creation of FTX. And it was just six years ago. So in 6 years, it went from like non-existent to like, okay, they're on the come up to like the dominant US exchange, like just coming for Binance, and then and now the guy's in jail. So yeah, a lot can happen in a short amount of time, right? Like in TradFi, how long would that like up and down story take? It could take like decades.
Well, if we've been in 1930, I think 1929, that could happen in a year or two.
Oh, fun times.
Because I think actually that's what we're living in. In crypto, we're still like in 1929. Now we're like more like in 1930 in terms of like how the market feels. So you can still go like it was in 1929. You can still go to some broker.
So no longer in the roaring 20s. So we're in 30.
Yeah, it says, I mean, like then in US, you could go and try to trade with a broker when actually the quotes were given from the room, which is like just next to your room with the broker, which were fake quotes, where people were just kind of ripping like people money apart, like just faking stuff and then running away with it. You can still face this in crypto, right? Because the regulation was not there, because it was like a wild market, because of the war and everything, because of the underdevelopment of infrastructure and everything, and a low level of education of people basically saying, oh, wow, cool, I can make like 2 times here or 10 times. Let's jump on it. That's what happens in crypto. So we're basically like in 1930s when kind of the regulation comes in, when it starts to become more professional. Same happened in Russia in 1990s, I'd say. Not the best period in general. Like kind of forming the normal and regulated sentiment in general.
And do you guys ever think that, we see a lot of these projects now, like we spoke about Halo, with the backing from RWA assets, especially for you, Ivan, you worked in TradFi. Do you ever think there is this sort of systemic risk on the horizon with so many of these projects using things like treasuries, other forms of RWAs to back their digital stablecoin? Is there a period down the line where we see even further volatility in the bond market within these treasuries? it does the news we see coming out of America, does it bring into question, this nature of the safe haven view towards some of these treasuries? And will we see a bite back to some of these projects who have really heavily relied on this sort of accumulation of treasuries like we've seen in Tether, Maker, a few of these other projects?
It's a great question, to be honest, and I'll try to kind of provide free perspective to this. First one is trying to be kind of credibly neutral and saying, hey, like treasuries are the biggest market. Like basically all the world finance is basically relying on this. It's huge. It's how markets work. It's stable. It's one of the best assets to have in terms of stability to back the stablecoin. So like, it's cool. Well, right. It's fine. It's just how it works. Then there is a kind of this anarchist or like the world, I don't know, plot, thought mindshare, like where you can say, oh, but what if US tips over? What about the gazillion, the trillion debt? What about this being devalued? Take a look at Portugal. Take a look at other kind of like read Ray Dalio about these cycles and how they happened, etc. So it's gonna fall over. Like this is one of the narratives where you can say, okay, like we should reduce the systemic risks because if everything crumbles in crypto, we could have the safe haven. But if we basically rely everything on RWAs, it all goes down in the same way with no diversification. Currently, we can have it potentially, but if we put all of the eggs in the same basket, that can blow up. So this is the radical side of things. And also another, like a little bit more formal, is that again, in backings by treasuries, etc., and all of these setups, like it's imperative to execute it right. Like it's a simple statement, obvious one. But what I'm saying here is that people, for example, often forget about the interest rate risks. And that's what we have seen in TradFi. And that's what people usually don't evaluate too much because usually they're relatively low compared to some others, especially if you take those low duration of the instruments. But if you take a longer duration, and it depends on how you construct the portfolio, this can be material. And all the stablecoins actually have to hedge these risks. They have to manage these risks. And we're actually thinking of one of the potential business lines for Resolv, where we have the risk segregation, to provide the rates volatility, basically a sell-off for the secondary tranche, which we have. So what I'm saying here is that it all comes down to execution. So with USDC, like it was relatively safe, but we've seen 10% DPEG. That's why we started Resolv back in the day. Though we have a total understanding of the reasons why it happened, right? We still don't know, to be honest, like what's the backing of USDT. We still don't know how the active asset management is happening in some of the portfolios and how it's being run. And we have seen when kind of smart guys in the big banks in TradFi being hit by the interest rates volatility, which just people forget about, which is weird to me, but that happens. So kind of pick the best players who know how to execute on that front. So that's why I'd say the big names like BlackRock and others building this, they have some credit in terms of kind of giving you the comfort of building this. At the same time, if you're like this crypto anarchist, maybe you should think about diversifying a bit. Because like if everything is correlated, and that's what we've seen with USDC. When USDC depegged, 8 out of 10 stables depegged, basically, because everything was linked to it. You're thinking like, okay, DAI, like, etc. The one name that didn't depeg was USDT, which actually pegged up. It depegged, but to the upper side, because everyone was just flying to it, which seems strange to me. So, so short answer is, depends on your stance. But in general, let's face it, unless you're an anarchist, RWA backing, if it's done right, it's one of the safest setups which you might have in general.
Right. Yeah. I mean, it's all relative. So, like, if you have something like the euro dollar market, like the dollar in that context is one thing, but then when you stack the dollar against everything in crypto, like it doesn't. Yeah, you could have like the craziest news coming out of the White House, and a USD stablecoin will still, like, in comparison to crypto, which yeah, you have like these tokens that can move like 30, 20% in a day, up or down. It's like, yeah, it's still, there's extremely stable, right? There's no comparison for a stable coin. So yeah, it's all relative to like what what the USD asset is being traded against. And in crypto, yeah, maybe if you had like on-chain gold, there's a little bit more interest in stuff like on-chain gold. But
it doesn't fight too much, though it is there, right? But somehow it doesn't pick up too much, I'd say. Like you still fall back to this. One BTC is one BTC. Always remember that simple fact, basically.
Yeah, it's an interesting question, right? Because you look at the core concepts from the origins of crypto, a separate financial system, and I find it I'm not saying that it's wrong or anything, but I almost find it a bit ironic sometimes. How we create the rails for a new financial system, but we just need to keep a hand
with
in
the old stuff.
Yeah, keep a hand in the
Rails for a new system. Yeah, Rails for a new system can be different than new assets, right? Like a stable asset is not the same as having the Rails. So yeah, even just like having the Rails, but having a wrapped version basically of the old asset, like it's a more incremental improvement, but it's still
boring,
it's
right?
Still progress.
Come on, let's face it, it's boring. I mean, we're in for innovation in this space. It's cool if you can trade 24/7. Great, okay, fun stuff. Now I can easily transfer it. It's fast, great. But hey, where's the fun part of it? Because I believe one of the biggest cool things of crypto is that you can basically create the markets for things that never existed, or which are impossible to create in TradFi in general, because of the new mechanics, because of some of the new opportunities. And when you just forgo this and say, okay, let's just take what we know. Again, you can do it step by step. It's kind of more conservative approach. But you want to kind of breach the barrier of what has been done. You want to create new things. But yeah, it's just my personal perception. It's okay, but it's not fun.
Isn't it maybe also true that, a lot of what emerges in a space is very dependent on the context, by which I mean to say that if you build like these new rails and they have new possibilities arise, right? And within those possibilities, new interesting things and the innovation, as you say, is going to pop up by itself. But, by tokenizing stuff that we weren't able to tokenize before, digitizing everything, maybe eventually. I mean, we already saw things like NFTs and other weird stuff like that, right? So who knows what else remains to be seen.
Yeah. You got content coins. Is that innovation? The content coins.
I mean,
but that's true. I mean, like sometimes when I see how bad the market looks or feels, or how kind of projects raise some ridiculous amount of money or anything for doing I don't know what without the product, I always try to humble myself with the words that, hey, if the capital flows into crypto in whatever form, that means that, oh, wow, cool. That means that I also can have something like this, I believe. Let me check. Wow, nice. How about that? Yeah, so fancy stuff. So it basically means that there will be new people coming. Yeah, I don't know how actually, but you can, I believe, enable it somehow on Mac. So that means that there will be talent coming in. There will be resources. There will be effort. There will be research. There will be new devs. There will be innovation. But basically, if the money gets into the system, if at least a part of it stays where people can build, it's good in general. It will just lead. Basically, if you think of it, the space, travel, and all of these innovations were driven through the war effort. You're not thinking about, okay, let's just fly a person to the moon and just sing songs about how moon is beautiful. The idea was to, okay, let's just create some weapons to bomb the bad guys. But then you kind of, okay, right, and you pour a lot of resources into this. And when you pour a lot of resources, it has these side effects that actually can create material positive effects, even though the initial idea was not so positive, like if you think of war as a bad thing, right? Here it can be a little bit similar. You try to fuel meme coins or all this kind of stuff, which again, personally, I don't think is fundamental or actually helps anything. But if the capital drives there, it's like Ton and Telegram, and they kind of run in the memes. And if it turns out that the capital flows into Ton wallet, for example, and stays there, then that's the resources which are there. And it can fuel the things happening on chain for the users of it, and it can just kind of expand it a bit. Just another example. So there are positive side effects to it. Nothing to complain about.
I mean, they're gonna pop up winners for sure, And talking about winners, we're gonna run our final section of the show called Winners and Losers. So yeah, just a fun way to close it out. So what we do is all the speakers pick a best performer and worst performer of the week to date. Can be meme coins, specific apps, chains, TGEs, events, can be countries, can be event names maybe with too many dates and years in them, whatever you want. Yeah, let's hit it off. Daniel, who wants to kick off?
Go on, Dan.
Okay, so my
Nice pass.
my winners is going to be some of the AI agent tokens. So yeah, like ARC, AI16Z, even AIXBT. Yeah, those things got hit hard, but yeah, I think like they're bouncing the fastest right now. Yeah, up like 30-40% in the past week. So yeah, I mean the price doesn't lie. So I mean, yeah, I guess there's at this point in time, yeah, people are buying those things. We'll see how long that bounce lasts, but yeah, they're riding a nice little bounce right now. I think for the loser, I'm going to be leaving crypto for the losers. I'm just going to say like U.S. stocks or Mag 7 stocks specifically. Yeah, I mean, I just think like they're kind of cooked right now. So like crypto's kind of decorrelating. Or Bitcoin specifically is kind of decorrelating from stocks a little bit, right? More of gold, and then yeah, you have some other the rest of crypto not completely rallying, but slowly following Bitcoin up as well. But yeah, stocks are kind of just like there's no one knows how long like the blowback from like tariffs can be, right? When you don't have the container ships coming in, right? Like those things operate on a delay from when those bookings are put in to when they actually arrive at the port. So there's a lot of, it's like very obscure. No one knows like how bad things are, like how long it takes. So yeah, I think those Mag 7 stocks in particular that everyone was buying, like not just Americans, yeah, like everyone around the world, and of course not people, but institutions. I think they're kind of cooked right now. So like Tesla, they had their earnings. I think the stock was actually up like 4% on the day, but yeah, the earnings were not very good. It was like minus, I think the first 2 months of 2025, Tesla was like minus 50% sales in Europe, minus 50% in China, like more in Australia. Yeah. So yeah, they were at the top. I mean, you had 2 years of plus 20%, and now it's like it's like popping a balloon. Maybe the balloon could have, kept going if you didn't have like the tariffs acting like the needle to pop it. But now, yeah, I think that needle has come. Yeah, for those Mag 7 stocks in particular, maybe there's other pockets of U.S. equities that are not as overvalued. But yeah, for those big names, I'm not that optimistic.
And for my winner, I'm going to go out on a limb. I believe in the DeFi renaissance. I believe it's coming. And I've recently been spending a lot of time looking into a lot of these, stablecoin protocols. We saw, like Curve, we're seeing a lot of stablecoin swaps come back into Ethereum. I recently looked into a bit more into Fluid. They've been gaining a lot more market share from the swap space on mainnet. And, I want to believe, that DeFi is coming back. We were in the clouds of the meme mania over the last year or two. People in CT removed the word utility from their vocabulary. And ultimately, this was something that it was the buzz, in 2020 to 2021, there was a real buzz around DeFi, around all these different mechanics, even if some of them were sophisticated Ponzi's. And I only think that as the stablecoin space hots up, and more stables come into the arena, we should see, these projects like Curve, Fluid, maybe even some of the lending protocols really start to shine. And for my loser of the week, I'm going to say anyone who held the Trump token, who sold it before the announcement to have a dinner with him. I mean, it's a great deal. If you're a top 200 holder, which I think equates to around like 300K worth of Trump. You get to meet Trump. So, hey, meet the president for 300K. I mean, that seems like a pretty good deal to me. So again,
Depends on your take on Trump. Speaking of Renaissance, fun fact is that actually our kind of graphical idea behind our announcements on Twitter are like this Renaissance and classical stuff because of the kind of the DeFi Renaissance. It actually was done before the narrative came back. So we actually ran it from September last year and actually before that. So somehow we kind of managed to tip into this. And then we've seen some other projects like kind of, this God touching the man and all this. Like it was in some of our earlier stuff. And then I don't think people were mimicking us, but just fun how it started to spread. And if you ask about the gainers and the losers, I think like the Zora is the gainer, but the base is the loser in this. Just because like there is like imagine there are two people or like two persons with media coverage or a level of hype. One is at level 1 of 100, another one is 99. And when someone just interacts, and if it's like not in a controversial way, then it kind of basically this flows out to the first one, taking it to 20 or 50, but it hits the second one. So it's kind of like the one is the gainer, the other, if it's controversial, which was a bit controversial, maybe the loser, though, again, I wouldn't say that about base because I love it. But I mean, in terms of general perception, right, that was perceived as like losing stuff.
Well, they invested in Zora, right? So Coinbase can lose some hype, but like maybe their bags are going up, right? So yeah,
I don't think so. Actually, I personally think it won't be affected too much. I mean, it's just that there are high standards, and people are used to high standards, and then something like controversial appears. They're like, oh, just look at this! Like, hey, everyone else may be doing this, but you won't be touching on this. But when it comes from a case where you won't be expecting it, or you have higher standards for this, you'll be crying and shouting how bad it is. But yeah. I actually, being honest, I didn't look too much into this personally. It's just like a bit of a perception from how I've seen it from the sidelines.
Yeah,
so maybe I'm mistaken. A disclaimer here.
I like, yeah, sentiment around base was definitely like not good for the last week. But then on the flip side, I'm reminded of that old saying, like there's no such thing as bad publicity. And I mean, everyone is talking about base again. So I don't know.
I think that's I always heard this, but
I disagree.
I think it's not. Yeah, I disagree. I mean, it depends. Like it depends on your goals. If your goal is just to make into this, again, there is a great short story by a Russian classic, Chekhov, where the person rushes into the house and shouts to everyone, like, everyone, family, look, I'm in the newspaper. God damn it. Like, this is what I've kind of was striving for. But the newspaper is about how this guy just got drunk and fallen under the carriage and was run over, but stayed alive. And so, like,
it's a win. It's a win. Survive,
so,
right?
Yeah, for him, it's a win. But the whole story was written in a way that, like, dude, that's not the great publicity that you're getting here.
I get it. I mean, once we Jesse Polak put up a post saying like, "Hey, what podcast should I go on?" So like, if we have him on the show, I'll ask him personally if he thought it was a net win or a net loss.
Yeah, no, maybe that guy came back with a bang. Because Jesse was gone, like he like had a kid or something. He was gone for a while, and he came back and like immediately started like posting this stuff. Like he made a narrative out of thin air, right? Like no one was talking about content coins before this, right? So he completely like created, Zora team definitely. Like, he piggybacked Zora for sure. He completely made a new narrative that just did not exist beforehand, and so he's like a good marketer. Yep.
Yeah, and the marketing for sure.
For sure. Awesome. All right, guys, let's wrap it up. Very interesting episode. Had a lot of fun. It was very interesting to get your perspective, like not just on stablecoin related stuff, but also I think you provide a very interesting perspective coming out of Russia, because I think you've seen some financial things play out in that, in a specific geography that's maybe different from what most of the most people in crypto are in, maybe. I just wanted to point that out. I thought that was very interesting. So thank you for that perspective.
I can add more.
Also,
feel free to ask.
We escaped the Western echo bubble finally, at last.
Maybe we should invite you back with like not a focus on stable coins, but like maybe on geographical arbitrage or things of that nature. I don't know, something like that.
Founder's journey is the big narrative, but yeah, whatever.
Awesome. So yeah, thanks, dude. Also want to thank the audience for tuning in. Definitely join us next time, every Thursday, 10 a.m. Eastern time. If you don't want to miss it, turn on your notifications. You'll be reminded. And Saturday, we'll post a full episode on YouTube. So that's it. See you on the next Market Cap. Bye-bye.
Great stuff. Thanks everyone. Cool. See ya.